The first 5 minutes after the market is open is a critical time of day. All of the pending at the open orders are getting filled and swept in. New positions are being made for the day. Traders are exiting positions from the previous trading day. It's a madhouse in there. But within the chaos, are there hidden gems of opportunity? Hey there, John Henry here, SSFTG. Welcome to the video. I hope it finds you well. Today, I want to take a look at the first 5 volume balance, or the FFVB. The drastic amount of information that you can derive from the FFVB and how it plays out for the rest of the day is absolutely crazy. The New York Stock Exchange Open has a plethora of orders slamming in at the same time, causing a huge bump in volatility. If we go at the open of any New York Stock Exchange market, this is the NASDAQ, micro NASDAQ specifically, we can see that the first 5-minute bar of the day is this guy right there. And that is likely going to be the one that has the majority of the volume for quite a while. Now, that bump in volatility, that is also a very large candle, and the few candles afterward are also not very small. But a lot of that typically occurs within the first 5 minutes, and sometimes even within the first couple seconds. Now, we can use our order flow tool to highlight the first 5-minute bar to give us an idea as to where everything is taking place, where all the action is. So if we go just the first 5-minute bar, and I don't want the previous day, so I've got to move it forward just a touch. There we go. Okay, so we've got the first 5-minute bar highlighted as far as order flow is concerned. Now, when it comes to the order flow side of things, let's set this on top so we can actually see it. There we go. We've got the POC sitting at 16,430. Now, as far as where that POC is, that's where all of the volume, or the majority of the volume, took place. Now, again, that might have been a couple seconds after the open. It might have been a couple minutes after the open. But looking into the first 5-minute bar, that's where we can see the emotions of the market at the immediate open and how things are moving. How was the market moving, and how were the participants feeling along the way? Were they incredibly bullish? Bearish? Maybe the volume scattered all over the place, showing kind of undecided. And that's where all the information can be invaluable for the rest of the day, and sometimes several days. If we look at the first 5-minute volume, we can see that there's a nice batch of volume here, and then very obvious prominent peak right up in the top. So there wasn't really any confusion. It seems like everybody agreed right around there and a little bit here was a pretty good spot. Now, the POC landed at 16,430, and that's going to be where my attention is going to go for the rest of the day. As far as a major zone of support or resistance, that first 5 volume bump is going to be huge. That's where all of the longs are long, that's where all the shorts are short, that's where everything is taking place. So if I'm going to be basing the movement off of everything, let's go off of the first 5-minute bar up to that POC, and we can ask ourselves, have the bulls been satisfied in the move up? These are their likely upside objectives. If the market rotates back down and breaks down through a new low, where is it likely to go? Well, the top is there, so that's at best what we can work with. And if we look at projections down, we've got support here, support there. Those are their targets on the way down. Scalper's target, 1-to-1 target, and 2-to-1 target, reward versus risk. As far as those moves to the downside go, remember, those are also actionable areas of resistance and support later on too. So this 1-to-1 is a nice zone of resistance for sellers to pressure back. The scalpers area was a nice area of resistance for the sellers to push back. The break-even point, if the market can make it up there, is going to be a nice area where the market can try to push back. And that's exactly where we are right now. The market has pushed back off of that area for the last 20 or 30 minutes. Now, let's look at what actually took place on this first 5. Yes, we know that both sides have had some pretty good moves. At least the bulls had scalps, the downside had 2-to-1s. But within this, were they happy? Did it work out nicely? How did it function? We know that the bulls got kind of dumpstered on. Yes, they got some targets, but realistically, they're probably the ones that have been disappointed. So we know that for the rest of the day, even though it opened with a gap up, we're going to have a little bit of a bearish context until they can get back above that. If the market can return above this 16,430 value point of the first 5, then realistically, we've got a very good likelihood that the market spikes back up to the highs. And we can base all of our assumptions off of that going forward because we have all the information we need. If we were utilizing the low down here to a POC retest back up at the top, we know that scalpers are likely going to be looking for targets right around the 16,500s. 1-to-1 targets would be in the 570s. You get the idea. So it allows us to plot everything forward just based on that first 5 minutes. Now, does it have to be the first 5? Could it be the first 15? Could it be the first... Yeah, it can be. The important thing here is that you stay consistent. If you're always using the first 5, then always use the first 5. If you're always using the first 15, then always use the first 15. Whatever you're using, just stay consistent with it so you understand how it works and you can learn it better. Right? If we're looking at the first 5, it could easily be the first 15 as well. There's nothing wrong with looking at the first 15. In this case, it actually demonstrates the exact same POC and a little bit of confusion above the highs. Right? So each one can give us its own individual piece of information, but the important part is that you stick to it. So that's going to do it for this one. I hope you found this guide and kind of an updated overview, if you will, on the first 5 volume balance, or the first 15, or whatever your preference is. Something to add to your own trading tool belt if you haven't already. I know I've talked about the first 5 volumes several times in the past. It definitely needed a little bit of an update, but overall the context is still the same. The concept is still the same. What is the morning doing? And usually whatever the morning did will dictate what the afternoon does beyond that, right? We know what the anticipation is. If you have any questions, feel free to drop them in the comments below or swing into the afternoon live session on YouTube. We're live most every trading day at 1300 Eastern, so you can hang out with us and the rest of the trading crew in the afternoon while we overview some of the patterns and setups from the VIP morning session. And we'll also take a look and see if we can find some other scalps in the afternoon as well. If you want to hang out in the morning VIP room, you can check out a trial on the main page of ssftg.com, and that's where you can also get access to our free 24-page guide on risk reward, simply by registering for a trial. That's going to do it, though. Have a fantastic rest of your day. Like I said, if you have any questions, you know where to get a hold of me, and I look forward to seeing you all in the next room. All right? Have a good one. We'll talk to y'all later. Thanks.